Everybody, this is going to be a video demo how to use TradingView, starting off at a beginner friendly series to get you into learning how to navigate the markets on your own. And we're going to learn some basic concepts here. This is really great for anyone, but especially it's directed towards those who are just getting into trading or can appreciate the simple approach of price action. Now, price action, let's begin with that. These are candlesticks, and they represent, right now I have them custom colored, but the white candles represent the price going upwards. The purple candles represent the price going down. And as you can see here, every time the candle closes and the price went from here to here, it printed a white candle. And if price went down here, purple candle. And what that really means is you can see up here we have time frames. Right now I'm on the weekly chart. That means each candle represents 1 week. If I switched it to the day, each candle would represent 1 day. As you can see, I can switch it over here. Now it zoomed in to this area. You'll see it zooms in. And right now we're at each candle representing a day. So for this candle to close, you can see right here, 46 minutes left for this daily close. And as you can see, compared to the last candle where it closed right here, this candle opened up, made some movements, but it ultimately, this candle closed here, opened up here, and it right now is engulfing this candle, which means that the candle is bigger than the last body. In a candle, you have a body, which is represented by the purple or the white, and you have the wicks, which I have here as white lines on both the top and the bottom. What the wick really means is where price went during a certain period, and what the body means is what price actually closed at. So, for example, right here, this candle is bullish candle. It started from, see this little purple candle? The purples always close on the bottom, and the white ones always close or open on the bottom and then close on the top, vice versa. So it's pretty interesting, but that's how you read what happens in each day, or you can even go down to the 1 hour, and then you can double click right here on these numbers and it'll automatically pop them into a viewable space. And it says on the 1 hour. Okay, so that's a little breakdown of going through the different time frames. Now getting back to it, price goes up and down, right? And that's what you can see happens in the market. Market goes up, then it comes back down, goes up, comes back down, goes up, comes back down, goes up, down, up, down, etc. So that's pretty much what the market's doing. But a lot of times things occur in the price that can kind of give you an indicator what the overall trend is or what the sentiment is. As you can see here, this is a trend line, this aqua blue line, and it's an uptrend because it starts with a bullish movement, this bullish engulfing candle. The bullish engulfing candle, the bigger candle, represents this is the end of the down movement. This almost ate this previous candle. It became powerful again on the upside, and you see higher highs, higher lows, higher high, higher low. So that's what an uptrend is. And the same thing goes for a downtrend. You can see there was one that went right here where price just kept going lower high, lower high, lower high, lower low, lower low, lower low until it reached a support. What's a support? Well, that's this green line here, and you can customize the colors however you want. I happen to have that as a green. That's a support line. It means that the price cannot go any lower. And a support line has its opposite at the top. It's called the resistance. It's where price cannot go any higher. So the price went up here, it says resistance twice up here, you can see. And all the bodies of the candles, they closed below. And the candle bodies are more significant. They hold more weight. They're more, they tell more of a story of what is going on in the market, in the direction it's going. Sometimes they can trick you, like you can see right here. There was a little uptrend here, right? And price kept going higher, and it even printed this big engulfing candle. But then what happened? It hit this resistance, and the resistance pushed it back to the trend line. And then in the trend line, this is super important for when you're trying to make a decision what's going to happen next in the market. Watch how the trend is broken here, right? And once the price went under, it went a little crazy. That's why you have these long wicks on these candles, because price was going all over the place. And then finally it decided, instead of closing above, which would indicate still bullish movement, it closed below. And in that last market cycle, that was the indicator right there. We closed below that trend line, so price went down and dropped. And that was sorry, that wasn't last major cycle, but that was the last kind of little run we had on the weekly. Came back, came to the support, very good support, which this support is based off of another resistance back here that you can see. Support and resistance, different levels. Right here, price had to break out and then found some support, and then it came back and it touched that support again, confirming that it was going to hold and it wasn't going to go any lower. So then eventually what we see, another uptrend is going, and we're back at this tight point between resistance level, and are we going to break this trend again and come back to the 98? So pretty much that where, my personal focus on a shorter term is between these two levels. If you go to zoom out, there's, other levels that you can concern yourself with. You can go, this is the left side tool belt or toolbar, and here's you got your trend lines, and then if you go down a little bit, you got your horizontal lines that just puts a straight horizontal across the screen. Really good for these levels, support and resistance. Now I'm gonna change the color to something a little more chill. Let's do a gray, because we don't want, sometimes you have too many colors going on, can throw off a bigger vision. So I'm gonna gray those out for now, and I'm really gonna move this trend line down here so you can see there's a bigger box we're working with right here. See, this was last cycle where Solana was actually at 21 cents, which is pretty wild. Came up to $4, went back down to $1.03, around there, $1. It went on a really massive bull run here, where it went from a dollar to all the way up here to $250. Now, whoever participated in that, I can say I did not, because I didn't know about Solana back at that time. They're very happy. Now what happened here, price found a top, and how you can see what's going on in that top, All these candles are white, they're bullish, they're engulfing. Suddenly you get this one right here, which some people call it a gravestone, some people call it a, reverse hammer, or upside down doji. Usually I hear it as a gravestone. And what that really is a small candle body and a large wick on top. At the top of a bullish movement, you see one of these, that's a really good indicator that price is going to reverse. A very good indicator. It's very common to see this at the top of a market. And what happened after this candle became engulfing and overcame this one. Okay, so then someone would naturally say, okay, well, as long as price doesn't engulf this candle, we're good. So that's where you see a little support there. But then price engulfed this one and this one. So now it's a little, people are wondering, is it going to go back up, down? And there's a lot of confusion at that time. As you can see, there was a support that was holding there for quite some months, 1, 2, 3, 4 months. Then it broke that. That is a big, okay, like something big is going on if you see a candle like that, destroying such a big support here. You saw price dropped within 1 month, went from $90 to $45, broke another, what seemed to be a support resistance level here. See how it flipped right here? You would think it would hold, but it didn't. It went back down, and it went all the way down to this 932 level, or you can say, let's put it back up to the body. It's like almost $10 level. Price even dipped a little low down here, but that was the support that it finally found, because look at this engulfing candle. It went all the way from $9 to $25, which is, if someone invested for the first time there, they'd be pretty happy with the returns. That's pretty nice. And then here, price was sideways for a while. People didn't know what's going to go on. And finally, price zoomed up and created these engulfing candles. Price is going back to the hundreds. People are happy again. Price breaks through this level again and then kind of holds it a little higher. You could say, if you use the horizontal ray, it will actually give you a little line that cuts off from where you pressed it. So mine cuts off goes from the left to the right and nothing before, which is pretty good. So now we're in this zone area, right? And right now you can see we do have some strong wicks on the top. You get some strong wicks on the top here. Very similar to what we had back here. So, there is potential this price could, go lower. Or if it holds this, this pretty much this trend line and this level right here of support are what's holding this price right now. If price breaks this trend line and then goes down to this support, if it breaks this too, and if it breaks 98, then we're gonna see price go back to 46, 45. And if it goes any lower, I don't know if it'll go back to $9, but the other levels you're seeing here on the micro, I'm just gonna throw some little levels there. All these different kind of like possible areas that you would look out for. But what's interesting? If you pull this trend line and you go back, it actually connects to these, which shows that this trend line has a lot of weight to it. Actually, it's probably even more important than this one. So I'll just remove this other one. And this trend line, you can make it a little thicker, right? And so, yeah, that connects back to here, which is actually very significant. So we're entering a very tight squeeze right now. What I'm seeing, I actually did not notice this till now. We're entering a very tight squeeze, and this is a very important line we're at right now. So if we hold this, and if we're able to break out here, price is gonna go. Look, if it breaks out from its last time highs and it closes above here, it's gonna go into what's called price discovery, and that's when we just don't know where price can go. It can go very high, just like people over here. If price right here down here was a smaller micro example of this. See, this is almost, it looks very similar to kind of like what's going on here, if you think about it in one sense like that. Price went up, went down, came up to this level at $4 from just like 25 cents. That's a pretty good deal. It's like a really good trade right there. But price goes back down and it comes back up here again, and it's at that resistance, and there's like that make it or break it point, and price decides to go up. And since it passed that last all-time high, it went to price discovery. That means no one can predict how high it can go. So this thing went from, you know, right here was $1 to $52, and you know, price dropped back down to like $20, which is understandable. A lot of people made a lot of money there. They want to sell, they sell, but eventually, if a project's good enough, it holds a lot of weight, and people decide, like, you know, they want to keep buying into it or holding it and not selling it. So that's what happens here, is like people start buying, they keep buying, and the buying over pressures the selling. So anyone who took profit here, they either bought back in, or they, you know, someone else bought it, and it price went up, so it couldn't go no more. And here was a lot of uncertainty because people were like, oh, these candles aren't that big, anything can happen. But once you got something like that happen, and once you got the price breaking down, it's pretty obvious. The price entered a bear market. Look at this. Wait, let me change that color to, let's do like one of these, or nah, let's do like one of these. Yeah, so price went into downtrend, and here it actually, like, there's different ways to there's many different perspectives how you're going to draw a trend line. Some people might start from, you know, the bottom more. They might go like that. But you could just see a channel, and price, you know, broke out of this channel very steadily. But you can see right here, it just kept holding, and it created this new trend line right here, which is the blue one that we got. Price held this little trend lines. Trend lines I've heard have to be at least 3 touches to be considered valid. That's one way of looking at it. But right here, you got 3 touches on that line, and price shot up from $18 back up into the 200 range. And we recently, not too long ago, we made a little new height. So we went to 286, which is pretty amazing. So now we're in this tight spot. If price does go below this trend line, we have to be realistic and say, well, if it can happen here, it can happen here. But if it doesn't, and we have a breakout, price can go, I don't know how high it could go, but I would say below the 1,000 range. Maybe, you know, I don't know. There's no way to predict it. It can do whatever it wants. And great example is right here. This coin. It's the original Bitcoin has a trend line too. That's one way to look at this trend line, because there's 3 touches. You can also see another trend right there. So sometimes, it's not just one. There's many. There's another trend line right here, and these are good. You should, if you're new at charting, you're trying to get into it, you just got to go on the chart and just start drawing. Just draw these trend lines out and see what's going on, and see how the patterns repeat themselves. A simple thing like a trend line, right? Whether you want to draw it like this, saying, well, these are touching many times, whatever however you draw it, you see the same thing happens once there's a breakout. Like right here, the price broke out, it changed directions, started going upwards. And so that's a great way to indicate when you're going to start buying again, because right here, price, this investment was 15 to 17K around this time. It's hard to say whether you're going to buy or not, but then price broke out and went back to 20K, broke out of this downtrend. And maybe people saw the trend line like this, so they didn't start buying till right here where price broke out of the 25. So there's so many things that influence people putting money into the market, because traders have so many different perspectives of how they see the movements. And so it's good to define, for yourself what you believe is going on in the market, and see how you can, make an entry when the time is opportune, and just following the trend, because there's an old saying in the market, it says, trend is your friend. And that's because a lot of people try to predict against the trend, and it usually doesn't work out. You can't really fight the flow, you have to go with it. And these patterns, they just repeat themselves in all markets. This is another channel where price is stuck between a support and resistance, and it finally broke out of the resistance, the top, and that's a perfect indicator. Look at this, broke out of the top and came back, and it retested that range of where it broke out at, which if you draw a line back here, you can see it pretty much is like, this was a resistance, and then finally it retested that resistance and then kept going up. We're at this little trend line. Now if it breaks that little trend line, we might see it hold this other approach to drawing a trend line that you might see, where it's slightly longer term, right? This and I'll change this color just so it makes more sense. I'll put it as purple. You can see that trend line goes all the way back to this touches this area, touches this area. And so this little blue line is just based off of, this 25K to here, and where it's touched right here, and it's almost touched here. So a little channel in between. But right now we're holding this little blue line, and sometimes, just like a river, sometimes changes its course a bit. Not its direction of flow necessarily, but it might shift in different seasons. To get a big rainy season, suddenly the river becomes really wide and starts digging away at the land. And as the rain starts going away and the water gets lesser and lesser, you might see it take another channel instead of the channel it was some decades ago. So that's the same idea here, I think. And if I put this little blue line, it'll come and almost touch right here. So there's many ways to go about it. Right here, I'll show you another resistance that was there. and I'll change that back to blue so it like stands out. But you see right there, we broke out of that resistance and we're here at support. We're at support plus the trend line. So there's more in, if you're following the trend as your friend, then there's more going towards the upside than the downside right now. We would have to break these structures, I believe, to start becoming worried about downside. And the way you, once these, let's say these trend lines ever break, the way you kind of make your targets is you're gonna take a trend line or the horizontal. I like to do trend sometimes horizontally, but you go to these levels right here. See where things are going like that. These little levels, you go like that, and you just extend them outwards, and you can start knowing where price can hold support, if it holds support at these levels, if price ever breaks. And that's a good way to indicate, if you're gonna start becoming, let's say that it breaks and you're trying to catch some sell in there, and you want to sell and make money. You can make money go on the downside, and that's very common. But you first have to just be able to recognize patterns, and then know that anything can happen. So you can't be too emotionally attached to one decision and one way you're looking at the market, because your perspective can change in a month or two based on what the market's doing. So you have to always be ready for what can happen. As you can see right here, we had a bit of a downtrend there, right? And then price really took a move down and then created a variation where price, the slants became more steep, or so that's what we saw recently. We saw a lot of sell-off, and what people would speculate as manipulation, whatever there might be to describe what happened here. Obviously price went down, and right now it's like this is on the 3-hour chart. It's consolidating in this little tight realm right here. So based on what this does, if it goes below it could break out of this trend line, and we have all this space down here. But if it breaks above it, and especially if we catch this little red line right here, and we can break above it, we're gonna look for more upside. That's just an opinion, but price breaks above the trend line, usually price goes back up. As you can see right here, this is a downtrend, and right where price broke out, it'll come and retest it. So that's where you usually enter the retest. So you enter right there. So if the price breaks out here, this little trend line, honestly, on a bigger scale, we're already kind of at a retest because we're on this trend line here. So some people might already be buying, and that's what sometimes this is. It's called, sometimes when the price is really consolidated, they call it accumulation. So the orders are accumulating. People are building up. It's like a pressure valve ready to explode. So it can go down, it can go up very quickly. Depends on what the money does, because if more money is in the power of the upside, it goes up. So yeah, you gotta think about it in risk rewards. So yeah, that's pretty much it on some basics there. And as you progress in the market, you look at different opportunities, and you take advantage of them, or you just watch them and you just learn. You don't have to always you don't have to make a commitment to using any money when it comes to analyzing the markets and learning them. You can spend as much as you want, as much time as you want, just drawing on the charts. Don't spend any money. Just come to a point where you feel like you can understand more how price moves. And when you feel confident, then you start off with a small amount of money and you find a good platform that you can leverage, or you just take the spot holding method, which means you invest for the long term. You buy and you hold, and then you would hold in a decentralized wallet or some kind of hardware wallet or decentralized wallet. You could look more into that. But you set up a wallet or you set up a exchange account, and you just get it funded. You make your account and everything, and you're good to go. You never have to give your money to anyone else. You just learn how the market moves first, and then when you can predict, okay, well, I'm willing to risk this amount of money to prove that I think the market's going to go up, and you have to be okay with what happens. How much loss can you tolerate before enough becomes enough? And you have to decide that for yourself. That's called your risk to reward ratio. You have to decide how much potential can I have if price goes up. Well, let's say I'm trying to get into Bitcoin right here, and I turn this to green because I feel like that's where I want price to go up, so this green line. And right now price is down here, so let's say I go over here to forecasts. It's the fourth one down, or fifth one down, and then you go to long position. Long means up, short means down. It's just trader lingo. So long, and let's say you're entering right here. The green represents what's your reward potential. Let's say you move it all the way up here, and you're like, well, my reward potential is up all the way up here. Now, where are you willing to, this is your stop loss, where are you willing to get out if price doesn't go your way? Well, like I was mentioning earlier, if price goes below this trend line we saw from a while back, which is right here at the, see, if you ever enter this, you're like, where did my chart go? Just double tap the right here, scroll over, and there you go, your chart's right there. So we saw this trend line from before, right? And we're saying, well, price goes below that trend line, is probably going to go lower down to this channel. So I'll get out if price goes below that trend line again. So I have to find a major move that would, well, I got one right here. I got this wick, which the price didn't go any lower than the point of this wick. So you can say, well, price won't go lower than that wick. I'm going to give it a little space. I'm going to put it right here. Stretch this out a bit so you can see. So that's how much I'm willing to risk. And there's actually automated services in these platforms where you can set it, say, take my money out if price goes down. And you can see right here, 4%. You can see right below my cursor, there's 4.18%. If price goes below 4.18%, right here, take me out of the trade, and I'll take my losses of 4.18%. That means if I risked $100, maybe I'm down $4, depending on how much leverage you're using. It could be more. But right here on the upside, if my price goes up to here, I want to take my money out, and I want to take my 13% profit. So that's your 13% profit versus your 4% risk. That's a good trade off, because your risk, you have to accept it. Like, you can always lose that money, but at least it's not this money, right? At least it's not this money, right? At least it's not down here, right? Then it becomes negative gains, negative 20 something percent. So you're gonna cut your losses. That's how you make money in the long term, because you're not always going to be right. You have to learn how to cut your losses there, and then just wait. So if price does break out and you hit your stop loss, you're like, oh, I'm out. Wait, see what price does. Maybe price comes down and then it holds support right here in the bottom, and you decide, well, I think it's going to go down, you want to sell, and you can go here and you can say, well, I would enter there a sell. Oh, this is a way different color. Hold on. And then you say, well, let me change that green to like a lighter. You say, well, I want to sell there. I want to go down to this purple line, and I want to put my stop loss up here where these bodies are touching, whatever. So that's options. You're not going to take every trade though, just because there's an option. You have to make sure it can prove itself, and you want to make sure there's some evidence. Right now, we know there's more evidence that every time price hit this blue line, price went back up, right? And every time it hit the blue line, it went back up since back here, kind of there, definitely over here, over there. See, price is repeating this pattern. So the most logical approach would be, well, I think price is going to go up. So you play China's your friend, and you say, well, I'm going to get in here where this price is squeezing. I'm going to have my stop loss down here. I'm going to have my take profit up here, and boom. That's one way of approaching it. Another one is to wait for this to break out of this red trend line. Breaks out, retest, you get in, put your stop loss around the same spot, maybe a little lower than this channel, like here, and you're good. Depends how much you want to risk, and you have to learn. It's hard for me. I'm not going to explain it in one video, but learning risk management, learning how much leverage to use, how much money risked is this stop loss compared to the size of the order you put in, and how much do you make from that. And you have to balance it out, because you don't want to just let's say you're like, oh, I want to try out on $100 and see what I can turn that into. You're not going to risk the full $100 on the first trade. You want to at least pull it out to being like maybe 50 trades. Like, let's say you did 50 trades, you're risking $2. So like if you had $100, just risk $2 here, and then right here you would gain, if this let's say this is $3, let's say this $3, you're risking $3.50. You risk $3.50 on this trade, and then you can potentially gain $13.21 on this trade based on the percentages. That would be risking 3.51%. But there's a kind of golden rule. They say, try to keep it to like 1% risk. But when people are feeling edgy and they feel like really confident about it, don't go above 5%. That's what some people say, and that's being very generous. That's usually for more experienced traders. They go to these higher percentages, but I would say comfortably between 1 to 3%. So it might be a little bit more fun. You say, well, I want to risk $3 on this trade. Well, if you accept your risks and you're not going to get emotionally affected if you lose that $3, then take the trade. And if you have a lot of money and you're like, for $3 is nothing, you're like, I'm willing to risk $10, $20, $50 on a trade or investment, then accept your risk. And that's what people, they miss out a lot on profits. And I speak to even from personal experience, because of not accepting your risks. If you when you, as a trader, learning how to put on the trade and just walk away and just waiting and not being anxious, just waiting. Don't let the emotions like dictate what you're gonna do next, So that's the most important thing with trading and making money, is you have to have control over your emotions. You can't let the world sway you. You have to become strongly rooted like a giant tree, and you'll be able to be successful in any field. So this is my first video. I hope this helps. This is an overview. I'm gonna try to structure, go into editing and stuff like that in the future, where I can uh, break down one concept at a time. But this is my favorite thing to use: is trend lines, support and resistance, and mindset, pretty much, and price action too. Just seeing what the candles are doing. It's pretty obvious that when you're going low for so long, and you start seeing like something like this, like big wick here, and then at the bottom of a trend, if you see a strong wick on the top, that could also mean a lot of buying pressure because buyers sent the price like that, and like in the matter of a few hours, right? So that means that there's a wave coming, and then right here was confirmation of it when this little candle engulfed this candle, and then it sent price up. So that's price action. You can research price action. There's lots of books on it, but you got to learn price action to become a successful trader. And that's my opinion. I think too many indicators, too many things going on, too much automation just can weaken our perception a bit if we don't use them properly. There's a lot of great indicators and great automation tools and stuff like out there that can potentially be helpful, but it won't make as much sense unless you learn these basics first. You gotta learn these basics. And I've had people come up to me and they just say, "What about this tool? What about this indicator?" And I never heard of it before, and I'm sure it helps. I'm sure, it does something, but end of the day, price action is king, and all the markets have these same very basic movements. And if you're just patient enough, you can catch a really good move and, change your perception of money. And you're not going to become rich overnight. That's not the way to do it, but you got to build yourself up and then keep the consistency of building yourself up. So start small, find your path, find your way to generate consistent income, whether that is, getting a job or studying a occupation, but you have something consistent. And then trading should be something you do, unless you're super talented and good at it and you have enough money that you can, try it out without worries and not to, focus on life expenses. Then by all means try to become a full-time trader. But for the practical option, I would just say it's a great way to take a little bit extra money you get at the end of every paycheck or cycle and play around and see if you can make that money turn into something greater. And you have to be willing to risk a little bit. And the easiest way is just buy a good investment, just hold it for 5 to 10 years and add little amounts over time. That's the best way to start, in my opinion. Instead of opening up a savings account, just put it into some of this, put it into something that has potential to grow as much as it has over time. And there's so many different projects out here that haven't seen their full potential yet, and so they have a lot of interesting projects out here. Some of them are just little memes, but there's a lot of opportunity to be made across the board. So thanks for watching.